We're looking directly at Ferrari's first quarter 2026 executive briefing, dissecting the financials, the future outlook, and the inherent risks of the world's most iconic luxury sports car manufacturer. This explainer is a highly structured, data-driven analysis, drawn directly from Ferrari's earnings release, their earnings call transcript, and their official annual report. We're going to strictly rely on the figures and statements provided by management to understand exactly where the prancing horse stands today.
To keep things moving, we've broken this explainer down into 3 distinct parts. Part 1 covers the numbers. Part 2 dives into strategy and the 2026 outlook. And Part 3 tackles risks and headwinds, followed by a quick summary of the road ahead. Part 1. The numbers. Let's translate Ferrari's raw first quarter data.
Okay, let's dive into this. For the first quarter of 2026, Ferrari reported net revenues of roughly 1.85 billion euros, alongside a really strong net profit of 352 million euros. It's a fantastic baseline to start the year with. What you really want to pay attention to here is that this actually represents a 6% revenue growth at constant currency compared to Q1 of 2025. Basically, it shows that even with a complex global backdrop, the top-line revenue engine over at Maranello is running exceptionally smoothly.
When we look at profitability, EBITDA sat at 693 million euros back in Q1 2025. Fast forward to Q1 2026, and it's reached 722 million euros. So we're looking at a 4% year-over-year increase, or if you look at constant currency, a 9% bump. As CEO Benedetto Vigna pointed out, this growth heavily underscores their core strategy, prioritizing the quality of revenues over quantity. They aren't just pushing more cars out the door, they're making sure they sell better.
And you can really see that quality over quantity strategy playing out when we look at the shipments. Total cars shipped only increased marginally, going from 1,848 units in Q1 2025 to 1,904 units in Q1 2026. That is a tiny bump in volume. Yet the operating profit, or EBIT, actually expanded from 542 million to 548 million euros. So they essentially shipped a similar number of cars, but made significantly more money doing it. Honestly, it's the ultimate proof of their immense pricing power and brand desirability.
So what exactly drove these numbers up without a massive spike in volume? Well, the main drivers were a richer sports car mix and a much higher demand for personalizations. Clients are adding these highly profitable custom options to their vehicles, which just pushes profitability through the roof. On top of that, Ferrari saw a really positive country mix, led mostly by exceptionally strong sales in the Americas. And finally, outside of the cars themselves, higher Formula One racing sponsorships and commercial revenues gave a nice, significant boost to the bottom line.
And this brilliantly illustrates the official Q1 highlights, drawing specific attention to a standout figure: a robust 653 million euros in industrial free cash flow. That's a 5% increase compared to last year. Generating that level of cash, especially alongside an EBITDA margin of 39.1%, gives Ferrari massive financial firepower. They absolutely need this to fund their future operations and some major technological transitions.
All right, moving on to Part 2, Strategy and the 2026 Outlook. Let's transition from the historical data to management's roadmap for the rest of the year. Riding on the strength of Q1, Ferrari has officially confirmed their full-year 2026 guidance. They're projecting revenues to hit right around 7.50 billion euros. Adjusted EBITDA is expected to be greater than or equal to 2.93 billion, and they anticipate generating an industrial free cash flow of at least 1.50 billion euros. Management made sure to emphasize that this outlook is heavily shaped by a positive product mix and those highly profitable client personalizations we were just talking about. Now, driving that product mix is Ferrari's comprehensive road car lineup. Just to jog your memory, in 2025, they launched 6 new models, including the 296 Special A, the 296 Special AA, and the Absolute Beast, that is the V12-powered 12-cylindry. The startup production for these newer models feeds directly into their 2026 strategy. And to support this incredibly diversified portfolio, which ranges from traditional internal combustion all the way to hybrids, Ferrari recorded capital expenditures of 253 million euros in Q1 alone. But honestly, the most critical piece of the future product roadmap is this, the highly anticipated FerrariLuce. Scheduled for a world premiere on May 25th in Rome, the Luce is Ferrari's very first full electric vehicle. CEO Benedetto Vigna noted that this car represents the convergence of some incredible technologies, boasting over 60 brand new patents. We're talking everything from electric engines and inverters to battery integration into the chassis and literally even the windshield wipers. It's a monumental step for the brand. And the market appetite for this roadmap, it's absolutely ravenous.
During the earnings call, CEO Benedetto Vigna confirmed that consumer demand remains exceptionally strong, stating, "Our order book further extended towards the end of 2027. Think about that for a second. It's a staggering metric. It effectively locks in revenue visibility for the next 2 years, shielding the company from any short-term economic volatility simply because the cars they are building right now are already spoken for."
Because of this rock-solid visibility and cash generation, their capital allocation strategy is highly aggressive when it comes to rewarding shareholders. Following the annual general meeting, a massive dividend distribution of approximately 640 million euros was approved. Right alongside this, in Q1, Ferrari continued its multi-year share repurchase program, executing 226 million euros in buybacks. So they are confidently returning capital while simultaneously funding their big electric transition.
Now for Part 3, Risks and Headwinds. Let's pivot to a strictly neutral, factual analysis of the bear case. So the crucial point is technological risk. This direct quote from Ferrari's 20th annual report plainly acknowledges the stakes here, stating, "The introduction of electric technology in our cars is costly and its long-term success is uncertain." Now, while the FerrariLuce is packed with patents, management is being incredibly transparent. Integrating electric technology into a brand that is historically defined by the sound and emotion of combustion engines carries immense financial and long-term market acceptance risk.
Geopolitically, we're also seeing some localized challenges. While Ferrari experienced exceptional sales in the Americas in Q1, they reported flat deliveries in the Middle East year over year. Management noted this was directly caused by conflict-related logistics challenges in the region. Now, they were able to flexibly allocate those cars to other markets to maintain their overall numbers, but it perfectly highlights how regional instability can disrupt their finely tuned delivery networks.
Beyond the EV transition and regional conflicts, management listed out several strict macro headwinds for the remainder of 2026. These include the introduction of U.S. import tariffs on EU cars, which acts as a direct business obstacle. They are also facing negative currency impacts, specifically netting out hedges against the US dollar and the Japanese yen. And finally, they project increasing depreciation and amortization costs that are directly tied to the start of production for their new advanced models.
Summary. Let's bring it all together for the road ahead.
Let's move to and see how this builds a complete picture. Step 1. Ferrari delivered strong Q1 profitability, driving revenue, margins, and net profit up without relying on massive volume increases, all thanks to those high personalizations. Step 2. This financial strength allowed them to confirm their full-year guidance and confidently approach the historic launch of their first EV, the Luce, with an order book booked completely out to late 2027. Step 3. Yet they still have to carefully manage a balanced bear case, navigating U.S. import tariffs, currency fluctuations, and the inherently costly, uncertain transition to electric powertrains.
So, we've seen the numbers, we know the strategy, and we understand the risks. The definitive question moving forward is this: can Ferrari's electric leap with the Luce maintain the brand's legendary profitability in an uncertain global market? The financial foundation is undeniably strong, but the true test of their strategy begins on May 25th.